Phil, over to you.
Hi, Ian. Can you hear me? I'm having to do this by my phone because for some reason my my setup's not working today. So hopefully it's not too distracting. Is it a reasonable line?
Okay, Phil, that's good.
Fabulous. Okay. Good morning, afternoon, evening, everyone. So if we start straight on to the section 2 paper, I think last time we got as far as the discussion of up to and including question 7. So I propose that we just immediately go on to question 8 and the distinction that has been made between gains and losses that impact on surplus and deficit. So the question for the tag is, does the tag agree with the distinction that has been made between realized and unrealized gains and losses and how they are to be recognized in the financial statements?
Thanks, Phil. So open up for comments at that stage. Yeah, Jenny.
Thanks, Ian. I don't know if I've misunderstood this, but it sounded to me like we weren't going to have an OCI section. We were going to have, you know, an equivalent of profit and loss, surpluses and deficits, and then everything else was just kind of going through reserves. So I wasn't sure. So I don't know if I've misunderstood, but that didn't seem quite right to me if that was the suggestion.
Phil?
Yeah, so the intention was that instead of the OCI, we'd focus on the realized gains and losses going through surplus and deficit. And then the majority of unrealized gains and losses would be shown in the statement of movement of net assets rather than having a separate OCI section.
Okay, I mean, I don't sort of fully understand why, I guess why we're proposing that. So I don't know if
Karen,
there's any further exit.
So we'll get onto this a bit more when we get onto the financial statement presentation. This is where the two hit each other. The thinking behind this is around what are the numbers that are important to non-profit organizations? Where do their stakeholders want to focus? What do we want to highlight to them? And the feedback that we've had is that actually the surplus and deficit position, the excess of or deficit of income over expenses, is actually what most stakeholders can relate to and find important. And so the thinking was to effectively end that that primary statement at that point. We thought, our thinking, to be quite honest, was that within that we would want to focus on realized gains and losses. Again, people understand that you make a gain or a loss if you sell an asset, and to be able to put that and include that as part of surplus and deficit. But because we are progressively kind of updating IFRS for SMEs, we're not tackling all sections. There are some sections in the standard that have got unrealized gains and losses that they're putting through that primary statement. So we're having to have a bit of a combination of the two, but the preference is that unrealized gains and losses go through the statement of movement in net assets rather than through the primary statement that gets to surplus and deficit, because we're thinking about the stakeholders of those particular statements and what they find of value and importance.
I suppose one question, I mean, I guess, yeah, would that be, would that apply equally to all types of NPO? There might be some where, you know, there is more emphasis on unrealized gains and losses. You know, if they've got significant endowments perhaps, and they've got property that's being revalued, but you know, I don't know whether, I mean, I guess if it was investment property it would go through, but then that's not realized. So maybe I'm confused there, because if about the distinction between realised and unrealised then
Yeah.
versus, you know, what we might think of as being performance.
Yeah, I think this is definitely something that we will come back to when we
Yeah,
look at the
okay.
financial statement presentation and what will appear in what statement. So I think it's getting that distinction, and then I think we will inevitably come back to this when we look at financial statement presentation.
Okay, thanks.
Okay, Freddie. Oh, you're on mute.
Thank you, third time lucky. On the note, I had a note here. I was thinking whether this is actually the appropriate section to talk about that distinction, or how is it actually presented? Because, for example, in income, we say, well, income encompasses both revenue and gains. So fine. So whether realized or unrealized, it's still an income. And whether it's presented in what primary or which primary statement is presented, I'm not sure whether it needs to be in this section, because then it follows, well, what are these, when do they arise? And it feels like it's more, I would normally say, standard level of it, or at least a presentation of primary financial statements, as opposed to this part of conceptual framework, if I can call it like that.
So Karen, back to you. I mean, I think I'm sensing that the group isn't there on this proposal, and we'll need to have the conversation in, you know, later in the context of financial statements, and also when we've covered some of the areas that have been mentioned.
I should have perhaps said earlier that you may recall that in the last meeting, Ching Chao raised financial statements, and he raised the question about whether financial statements should be included in section 2 or not. Unfortunately, he can't join us till a bit later, so but I think that it's a good question to ask, because there are separate sections on the financial statements later on. So there is a question about whether we do really need to include them here or not. We were, in drafting this, putting the carry forward from what's currently drafted in IFRS for SMEs, but I think it's a really good challenge as to whether that's needed going forward. And it may be an area where we look to see what happens to the revised IFRS for SME standard, to see the direction that they go in dealing with that matter.
Okay, and I think also in the context of the discussions, the separate discussions that we'll have as well, and then we'll circle back on that. Jeff, final comments, and then I'm going to move us on to the next point.
Yeah, thanks, Ian. I raised this in the last meeting as well, and maybe this has to do with the conversation we're now having about what goes into chapter 2 here versus what's in a financial statement chapter. And you know, Freddie's point about about income, including both revenue and gains, and I agree with that. It's just, though, then the question about realized and unrealized, and it's kind of weird to have a statement of income where some of the components are not in there. I find it, but my point is maybe on expenses, I still think it's jarring to have expenses are expenses plus losses. It's just not very intuitive for me. And I think that's being driven, I think it might be being driven by the fact we have a statement of income and expenses or something like that. It's just expenses. I don't know, I don't have an easy solution for it. I mean, other than to define it as a separate element, a loss. But it is kind of weird to have it as expenses equals expenses plus losses.
Okay, thanks, Jeff. So I think, you know, that there is a big question being raised about whether we actually deal with this here at all, or whether we deal with it under financial statements. You know, I think with this, you kind of risk moving from being principles-based to rules-based as well. And then I think, you know, having had the discussion in the context of financial statements, then we need to look back and say, actually, based on that, do we actually address this even at a high level here, or is it more appropriately just dealt with separately? And that probably depends on the answer that we come to under financial statements. So I think, Phil, if that's okay for now, then I suggest we move on to question 9.
Yep, that's great, thanks. So question 9 was to do with recognition and measurement principles and the inclusion of the possibility of a value in use measurement due to the inclusion of service potential. So the question to the tag is, do they consider the inclusion of a value in use measurement basis appropriate in this section?
Thanks, Phil. And I think recognise that this is a vexed issue for IPSASB at the moment, which will come up at our, certainly in our June meeting and possibly in the September meeting, because there are differences of views, certainly within IPSASB, about what this might be. But in that context, IPSASB has taken the view that it will use fair value as in IFRS 13, but there will be a separate measure, and that's current value measure. That's what we have to discuss, what that is and the nature of it coming up. Karen, you wanted to intervene, and I'll go to Freddie.
Yeah, I just wanted to play in some feedback from Lebo, who couldn't make it today. Her comment on this was around in terms of she's wondering whether at this point it introduces an unnecessary level of complexity. She says she hasn't got an answer to it, and she's not completely sure whether it's appropriate. So it's really around kind of thinking through what's needed now, and whether it's necessary at this point. That was the comment from Lebo.
Thanks, Karen. Freddie, to you.
Thanks. I had two thoughts. First was, well, I think the overarching question in my mind was, is it too early to make a call on this until we'll get to, again, I would say standard level, either fair value and also maybe impairment where it could come in play, and then in a detail, one is how does what we have there interacts with the fair value and the fair value concept and those 3 approaches, including the cost approach as a part of the fair value. And second, in that G260 now, we say fair value in use is an NPO specific value. Well, value in use is in IFRS standards and not necessarily called out as a NPO specific value. So the question is, could that cause confusion? Same term made very specific for NPOs, even though it's explained, but obviously it's still the same term that would then sit across 2 sets of standards, one IFRS, one INPEC, if I didn't miss anything. So there's a couple of thoughts there.
So it may be better described as an NPO issue, NPO specific issue, rather than a term, because I think you're right, Freddie. Certainly this keeps coming up in IPSASB's work, that where we use a term, if it's, if we use it, it should be the same as in IFRS in order to avoid confusion. If it's something different, we should call it something different. And I think we should apply the same principle to avoid confusion, so people are clear if there's a read across or if there's not, if it's something different. Any other comments at this stage? Okay, so we have that caution from Lebo then about, do we introduce this? And I think, in a sense, perhaps we need to leave the place at the moment, placeholder, in terms of you could allow but not require or something like that, depending on where we get to when we look at it in more detail. So maybe that's a provisional way forward at the moment. Okay. Ready, back to you.
Sorry, and if I may, just quick one. I think this is one of the examples where I'm not sure whether the related parts of the exposure draft are in the same batch, but I think this is one of the examples where we come to the place where we could wanted to address something, but there might be other parts of the requirements which is related. Anyway, stating obvious probably.
It might be better to leave it as a placeholder for ED1 pending the later ED, and I can't remember whether it's 2 or 3, but we could put that cross-reference in for now, and maybe that does establish a precedent, you know, that we leave it as the question about is to be, will be covered later. Okay, so let's move on to the question 10 on undue cost exemption. Phil, did you want to say anything before we move on to that question?
Just that the undue cost or effort exemption that's currently in IFRS and SMEs has been maintained. So I think the question is, do the TAG agree with the inclusion of it, bearing in mind that I understand that there's currently a discussion as to whether it will actually be maintained in the IFRS and SME standard when it's updated or not.
Yeah, Elaine.
Thank you, Ian. I think I agree that it should include the undue cost or effort exemption because it's a very good concept. Though some have raised the challenges or its operationality, but I think to me, this may not be the issue of the standard. What I heard, some stakeholders actually, they do not like it because of the use of judgment, or some may actually have this perception that misperception that entities would just resort to undue cost or effort. And to me, perhaps this is more of an issue between the preparer and the auditor. So it's not an issue about the concept or the standard. Thank you.
Thanks, Elaine. Jenny.
Thanks, Ian. Yes, I mean, I know the undue cost or effort exemption, you know, there is support for it. In the UK, though, we chose to take out the undue cost or effort exemption when we developed it. So I'm giving the opposite view to Elaine. We chose to take it out when we developed FRS 102, and what we did instead was, so we recognise that, you know, there might be a need, or there is a need in some cases for, you know, a simpler option, but what we chose to do instead was to either have a simpler option, you know, make it a clear option, or make it clear, rather than it being available to all entities, you know, make it clear in which particular circumstances we thought it was, you know, more appropriate to take that simpler option. So we didn't disagree that there's a case for sometimes having a you know, a simpler way of doing things, but we put a different you know, a different boundary around it, shall I say. So just to put that, that's what we did in the UK. Thanks.
Thanks, Jenny. So I think probably the way forward is clearly we need to see where the IFRS for SMEs lands on this one. If we work on the assumption that it does retain this exemption, then there would be a logic to carrying it forward. But I think this is probably something where we should actually ask a specific matter for comment on that. So I think if that's okay as the way forward, so obviously we'll have to wait and see, but if it is retained, then we go that route. If it isn't, then I think we probably need to revisit this along the lines of you know, the sort of approach that FRS 102 has taken, and come back on that. That's okay. So let's move on then to question 11, and to an extent I think we've already covered this one. Phil, anything else you want to say? I mean, my proposal at this stage would be we carry it over into the you know, where we get to on the next discussion.
Yeah, that I agree. I mean, the reason for its inclusion was it was basically to highlight we're talking about GPFRs and not GPFS, and the Ipsos conceptual framework does have a useful bit on presentation in GPFRs. But I think, yeah, if we're going to discuss it later, and then I'm happy to just move on.
Okay. Any other points anybody wants to raise? Because it's quite a wide-ranging section. So we've got some clear agreements on some further work to do. Okay, thanks very much for that, Phil. Good paper. So let's move on then to paper 2 for this meeting on financial statement presentation and the analysis of the responses. And Paul, you're going to lead us through that.
Thanks, Chair. Yeah, the paper sets out the responses to the that section, I think section 7 of the consultation paper on financial statements, and the annex includes all the sort of detailed responses that we got. And from that, there are a number of issues that have arisen that we're looking for guidance on. One of them has already been talked about, which is where we draw the line on the income and expenses statement, or the statement of financial performance. So I think the first question that we have is about what we call the statement of financial performance. That was the title we included in the consultation paper, in line with IFRS for SMEs. And while there was support for that in terms of numbers, those people who commented did raise issues around that, how useful that was for in the MPO context, how particularly around whether performance, linking that to financial performance was useful in the MPO context, or whether the performance of MPOs is judged more widely. And taking those on board, the recommendation is that we change the name of that statement in PAG to income and expenses statement. It seems to resonate more with the sector and be a term that is fairly well understood. So that was our proposal at this stage.
Thanks, Paul. So open up for comments. Anybody disagree with that proposal? Okay. So I think, oh, Freddie, and then Jenny. Anthony.
Thanks. I'm okay with that label or name description, if you want. But then when I got to, I think it's number 5 in section 3, way forward, there was a comment that there are 2 numbers that are important. I think it's this approach is proposed because surplus or deficit, along with the level of unrestricted funds, are seen as the most significant or more significant numbers for users. And then I paused, well, if surplus or deficit is significant number, why do we stray away from it in statement of P&L, profit or loss? And couldn't reconcile those two. I can leave with the income and expenses if that's what really users want, but then I think the question then is that other than probably the deficit or surplus is not that interested for them, or maybe there is some slight difference that I missed. So just comment there.
Okay, thanks, Freddie. So I'll go to Jenny next.
Thanks, Ian. I mean, I think sort of probably the most important thing here actually is that there's the opportunity for entities to use whatever title they think fits and is appropriate, and that we retain that bit, and that people see that as a real option rather than you've got to default to something. But I'm not sure it would have been my first choice, but I you know, I can go with it. As I say, I think the most important thing is people can use the title that they think communicates to their own users and obviously isn't misleading.
Okay, so thanks for those 2 comments. I mean, I think, as you say, Jenny, retaining that option in terms of naming is really important. I think we need to make sure that the basis for conclusions explains the discussion that we've had. I think it's also what's potentially relevant here is that the idea is to have a discussion with the donor reference group on Monday next week, sort of around you know, what's important in the financial statements and so on. So I think you know, we may well get some useful feedback from that. But I think if we go with this proposal for now, but with appropriate explanation in basis for conclusions. Okay, so let's move on to the next section. And my proposal on this, Paul, we hadn't had the opportunity to discuss before, is just actually that we just walk through the table and pick up any comments that TAG members want to make, sort of section by section, if that's okay.
Yeah, that's fine.
Okay, so, if we take item number 1, is there anything anybody wants, does anybody disagree with the proposal that is laid out there? Okay, good. So we move on to number 2, requiring separate presentation of incoming expenses, net assets. Any comments on that? Okay, so item 3 then, permit but not require MPOs to use fund accounting. Okay. So then we move on to item 4, not allowing the deferred revenue accounting. Jeff, were you on 3 or 4?
I'm on 4, Ian.
Okay, go ahead.
So real quickly, I just want to make sure we're clear on something. I agree with not allowing deferral type of an approach, but I also wanted just to make sure, because I couldn't tell if this was just proposal. I mean, just talking about what one of the proposals we made in the concepts, the consultation paper, or if this is something that we're actually contemplating, which is to not recognize revenue until restrictions are met. And the distinction between a condition, which is a prerequisite to entitlement, and a restriction, which is a limitation on funds to which you already are entitled. It just, if you're thinking about waiting until a restriction is met, then that's to me a deferral approach.
Paul, do you want to come back on that?
I think we'll be coming back to exactly what triggers deferral of revenue recognition in the revenue paper, non-exchange revenue paper, which is scheduled for, I think it's ED2, isn't it, Karen? But so we'll be looking at the detail of that, thinking about how that's going to tie in with the other proposals that the IPSASB is working on, how it ties in with the wording in IFRS for SMEs, where you would, for government grants, for example, you would defer when you would not recognize revenue where there are performance obligations still to be met.
Right.
And those performance obligations may be wider than a condition, depends how you define, where you draw the line between restrictions and conditions. Mm-hmm. And performance obligations in IFRS for SMEs is wider than the conditions within IPSAS at the moment. So that exactly where we draw the line around what would cause you to defer revenue recognition and what would lead to revenue recognition immediately is going to be discussed and considered as part of the revenue paper. I think what we're trying to flag up at this stage is that the deferral approach in IS 20 is one that we wouldn't be taking forward at this point, where you can just defer and match with expenditure even if there's no limitations imposed. So that's what we're trying to rule out at this stage. But asking a question in the a specific matter of a comment in ED1, so that we've got that feedback for developing the revenue section. And then when we get to the revenue section in ED2, we'll be looking at exactly where the boundary for deferral should lie.
Okay, thanks, that's helpful.
Okay. So I think, as with a lot of things, the wording becomes really critical to get that principle over. And as you've outlined there, Paul, that specific matter for comment, so that we do get that feedback and that input that will help us with ED2. And I think we need to make sure, and we're going to, as we've already encountered earlier today, we're going to need to make sure that we do very explicitly say, right, okay, this is going to be covered in more detail in ED2. Okay, so let's move on then to item 5. Freddie, we've already had your point on this. Does anybody else want to make a comment on the proposed approach in 5? Okay, so 6 on comparative information. Any comments on that proposal? Yeah, Catherine, then Jenny.
And I have a bit of concern about 6. I think it's a little bit early to make a call around what we're requiring in terms of comparative information on disclosures. I think it's sort of similar to the conversation we had on the last topic, where I think we need to have some of those conversations around sort of standard level disclosures before we just sort of rule out comparative information. I think it's probably in some cases not necessarily as onerous as made out into the paper in terms of, you know, lengthy financial statements. I think we need to understand what those disclosures are before we say that adding comparatives would be too lengthy, especially around the point. I think, you know, we're saying that we're going to have a reconciliation of opening and closing. That in my mind is essentially the statement of net assets. That's going to be that reconciliation. So adding, I don't know whether that's necessarily, we'll talk about that probably as we move on, but I don't know if that's necessarily a necessary disclosure. So I would just caution making a blanket statement about comparatives right now.
Okay, thanks, Catherine, and I see nods for that. Jenny.
Yes, I was also concerned about this, and I suppose my starting point was that if the analysis between restricted and unrestricted funds is important for the current year, it's important to have that context provided in the comparative. And I think the feedback that it is very, you know, quite an important analysis, and therefore I would have thought we would carry that through. Thanks.
Okay, so I think the way forward on this one is that we include a placeholder at this stage and say it will be considered in the context of the material in later EDs. Paul. Okay, so let's move on then to item 7. And the proposal to develop additional note requirements. And obviously that's contingent on future debate. So I think, if you like, that's perhaps stronger than the comparatives discussion, but it's still a placeholder.
Yeah, I think we will need some notes when we're thinking about, we're going to be including the split between restricted and unrestricted funds. So I think that clearly points to the need for some note, but exactly what that is we'll turn, you know, we will develop it for future meetings.
Thanks, Paul. Yeah, so if you can develop wording accordingly that sort of, you know, indicates that there's likely to be something, but you know, it's open at the moment pending those more detailed debates. Then moving on then to item 8 on example formats. Any comments on the proposed way forward there? Okay, thanks. Support on that. So then item 9, the proposal in respect of donor reporting requirements. Any comments on that? Okay, any other comments anybody wants to make on that section? Okay, so Paul, I think maybe we'll just walk through the table in section 4 in the same way, if that's okay. So we've got, first is section 3 on financial statement presentation. Any comments on the proposed way forward there? Okay, 4 on statement of financial position. 5, statement of comprehensive income and income statement, which obviously references back into some of the discussions we've had earlier. Any additional comments there? Okay, so then we move on to section 6, statement of changes in equity statement. Um, 7 is cash flows. Any comments on that? Item 8 on notes. And a lot of these are contingent on the more detailed discussions that we'll have. 9 on consolidated and separate financial statements. That's obviously, we'll continue the discussion on that later. And then 10 on accounting policies and estimates and errors. Good, okay. Any other comments then on the paper as a whole? Yeah, Anthony.
I'm just looping back. So have we made a decision on Jenny's comment around OCI that I think the recommendation is not to use it, but I wasn't sure where we've landed.
I think we were leaving that one open at the moment,
Okay.
based on the earlier discussion.
Okay.
Phil, that's right, isn't it? Yeah, okay. But thanks for checking, Anthony. Okay, so are we good to move on to the next paper on narrative reporting? Okay, thanks very much, Paul. So I think now we move on to Phil's paper on narrative reporting.
Excellent, thanks, Ian. Can I just check you can still hear me, because I've had to move to a third audio setup.
Let's hope it's third time lucky. Go.
Yeah,
go so we can hear you.
So time's fairly limited, and I'd like to have a fairly good discussion and get the tag's input on this. So I'm just going to give a brief introduction. So the consultation paper proposed the guidance would include non-financial reporting information, also known as narrative reporting. In part 1, respondents were supportive of the inclusion of this, but did raise some conceptual and more practical issues with how it would be implemented. In part 2, respondents supported the description of the issue and the need to propose a common approach based on an overarching framework and high-level principles, but were split as to which alternative they supported. From analysis of the responses, we have developed a proposal for narrative reporting based on the existing ISB practice statement of management commentary and relevant IPSASB recommended practice guidelines. The proposal is that this will be a mandatory minimum. So if MPOs do wish to go further and implement other reporting, such as integrated reporting, for example, this would be permissible provided this minimum core that's explained in the paper is met. So I think the question to the tag is to what extent they support the proposed approach to developing this mandatory core of narrative reporting.
Thanks, Phil. So open up for comments on that principle of mandatory minimum. Not seeing any hands raised, so I think that overall approach we're happy with. Freddie.
Sorry, are we on question 1 yet, or is just a general question?
Just a general discussion at the moment on the overall approach.
Okay, one thought that came to my mind, but I haven't seen any significant pushback, is, we may have discussed it obviously, if something is mandatory, it may impact the uptake, especially for the smaller side of the spectrum of the entities. So I think it really depends on what the feedback was and what it will be, and whether that smaller side of potential reporters is actually represented there, because I suspect they might like the financial reporting and simplifications there. The mandatory narrative reporting might be too hard, depending how it's what is required. But if we will make that minimum, really minimum, and then establish that for these entities that are supposed to be in the scope, they should be able to report that, then I think maybe that's possibly acceptable way.
I mean, I wonder whether the way forward, because I think that's entirely reasonable, is actually that we put the proposition that this is a mandatory minimum, because then people people will see what the proposal is, and then you actually ask them the question that you know, if would they see the way forward proposed as you know, causing an impact on adoption, and if so, what particular areas would they see as problematic? And I think that would give us, you know, get feedback on the overall proposal of a mandatory minimum, but allow for that. Are there particular areas that people would see a problem with in practice? So if we use that tactic in the paper, and then be prepared to see what people say. Okay, Jeff G.
Just unmuting. Sorry, I had a quick. So with it being a mandatory minimum, I was just from my understanding, would it be required to be audited as well under INPAG? Or I know that for IFRS it's not. It's just recommended disclosure.
Yeah, it's a fair point. Phil, do you want to come back on that?
Yeah, so we haven't, the assurance aspects around this information is something we need to discuss and work through, because I mean, it will be a jurisdiction probably level approach as to whether and the extent of assurance over the information provided. At the moment, the drafting I have in the exposure draft doesn't mention audit, but it does impose a requirement to report in a fair and balanced way. But then that does tie into, is this going to be signed off by the same person or group who signed the financial statements? So this might be something, again, that once we've got the proposals ready, we actually ask in the ED.
Okay.
Jenny, you want to come in on that?
Yeah, thanks. It was just partly thinking about what Freddie had said, and you were talking about asking some questions in the ED around where this might cause more problems. And I suppose I was just wondering, it's a question, do we have information already from the outreach that's already been being done about how common it is for NPOs already to have to do some form of narrative reporting, and so whether this is, and maybe it is that just that those questions will reveal the answers, but you know, whether this is kind of standardizing something people are on the whole already doing, or whether it's going to be a complete step change for entities, which, you know, then does go back to the, can they sort of do it all at once question. Thanks.
Thanks, Jenny. Phil.
So we do have some jurisdiction level evidence, and it's mixed. Some entities do struggle with this, particularly the smaller ones, which is why the mandatory core that I'm proposing, or we are proposing, is fairly basic actually in terms of what it's requesting from entities. I think if individuals do have jurisdictional level evidence that they can provide, it'll be really useful prior to us having the ED, because we don't want to put something out that is absolutely alien to most jurisdictions. The feedback we got from the consultation paper was that some entities might struggle, but it's the kind of struggles that we'd expect. And I think that the level of reporting required, it is quite basic. It's fairly basic information about what the entity does, what its mission and vision is, what its basic governance arrangements are. So it's the sort of thing you'd expect most entities, I think, to be able to comply with. But it is something I think that we're going to have follow-up. We had one focus group, and the participants of that I think were very supportive. But it is something I think we're going to have to test again, possibly prior to full ED exposure, to ensure that actually we are taking people on this journey with us, and we aren't proposing something that's going to be almost or very difficult for a lot of entities and jurisdictions to comply with.
Thanks, Phil. Sam, you wanted to come in?
Thank you. There's two sections to the narrative report, the part that's about the financial statements and the part that's about performance. And I wonder how confusing that will be. It was quite confusing for the PAG. We worked quite hard to make sure it wasn't confusing for the focus group. But even then, some of the questions that people asked made it clear that they hadn't got that distinction. And whether it's one report in two parts, and also potentially if you did have audit assurance on the part that's about the financial statements, but had less audit assurance connected to the part that's related to performance, I just wonder if having it as two separate reports rather than one report in two parts might actually be potentially clearer for users and audit assurance, understanding of audit assurance.
Thanks, Sam. So I think you know, there's some challenges around how the principle would be expressed, partly because of the nature of the information that's outside the general purpose financial statements that's in the general purpose financial reports. Clearly, there's an active debate going on around levels of audit assurance on GPFR information, and that's being, you know, to quite a considerable extent is being driven by the current developments in sustainability reporting and so on. So I think, you know, we're going to have to express this quite carefully, because obviously we're trying to write an accounting standard rather than an auditing standard. But in doing that, we need to be cognizant of what's going on in the you know, in the auditing world, and I think we will also need to be cognizant of where the sort of debates and discussions have got to, you know, around you know, on the IASB side in terms of you know, its practice statement and where that might go and so on. So I think in this, if you like, we have a kind of principle that there should be, given the importance of narrative reporting, that there should be a minimum level of information provided. And I think we would need to test that proposition against the proposals that we put forward, bearing in mind what you said, Phil, and ask for feedback if there is a specific area that's causing problems. And then the precise nature of the drafting, I think, is going to have to be couched in that those different circumstances, and we will need to explain in the basis for conclusions why we've couched it in a particular way. So quite a lot of contingencies there, Phil, but does that give you enough for now?
Yeah, no, that's perfect. I mean, we'll get onto it in a second. It's just whether the sort of the minimum core we've presented, subject to that, is actually sufficient as a minimum core if we are going to do narrative reporting, and it is going to be mandatory. But I think we'll come on to that in a minute.
Well, there's two questions then, aren't there? There's the, should there be a mandatory quotes requirement, or the extent to which it can be mandatory in non-general purpose financial statement guidance, and then there's that additional question, which is, based on the proposals, is there anything, bearing in mind the overall accountability requirements, that should be added that isn't there at the moment, and why? And I think a question on that would be appropriate.
Yeah, and it also ties into section 1 and the preface and the discussion last time we had about statement of compliance within PAG. And if this is something that is going to cause an issue, the interplay with this requirement and an overall statement of compliance might be quite tricky as well.
Yeah. Okay, I think that's the right link to make. Should we just walk through the table then in 3.4? Is that the next place to go, Phil?
We can, yeah. So as Sam noted, there's effectively sort of two parts to what we'd require as a narrative reporting. The first is more based on the practice statement in IPSASB RPG2 and is providing discussion and analysis around the entity's financial statements. So I think the question would be is, are the elements that we've put forward in this table, which are based on sort of amalgamation of the practice statement and RPG2, the right ones for MPOs, or is there something missing from that, given that this is meant to be about the financial statements discussion and analysis rather than broader performance?
Okay, so open up for discussion and really, you know, picking up any comments on anything that's in the table in paragraph 3.4. Yeah, Freddie.
Thanks, Ian. I didn't find anything glaringly missing, because I think the descriptions are quite broad. But then where I paused, and obviously, if you are using ISB practice statement and IPSASB guide as a basis, there is actually a different starting point to the financial reporting requirements where we are starting from SMEs. And I think, and maybe again, I'm Captain Obvious today, but I think that's where we need to be here extra careful to make sure that we probably do more simplification, and in some cases maybe then more detailed and straightforward guidance in the language compared to when we are stepping down or starting with SMEs, because when I was reading those broad descriptions, they are fine, but if you are on the smaller spectrum of those entities, they may have they may need to spend more time than needed. But it's probably drafting thing as opposed to anything else. Tom.
Thanks, Freddie. I mean, I think you make a good point though in terms of where the requirements come in from, whether it's practice statement 2 or whether it's the IPSASB recommended practice guidance on financial statement and analysis. We need to be clear about that. And if we're adding in, just be clear why. Sam, you wanted to come in.
Thank you. On the paragraph that says information about MPO's objectives and strategies, I wonder if that should be financial objectives and strategies specifically, as it's in the financial section, because otherwise you'll have people talking about them, yeah, their missional objectives and strategies. So that might, I don't know.
Thanks, Sam. Any other comments on what we've got there? Okay, so then Phil, do you want to just take us on to the section on performance reporting?
Yeah, so the performance reporting section, we originally had goods and service delivery performance, but I think Sam, as we discussed, and I think discussion with the PAG and the focus group, that kind of good and service delivery language wasn't resonating with from the sector, so we've dropped it now, and it's just broader performance reporting as a whole. And here the proposal is the MPO would basically say what its objectives are in terms of performance, how it uses indicators to measure that, and what it's achieved in year. So since writing this and discussing with the PAG, the New Zealand performance reporting, service performance reporting standards has been flagged to us. So I think the current text I'm doing uses a lot of the approach from that, because I think it's a good principles-based approach that lets an entity really focus on what its users want, rather than something that's a bit more tied to a rules-based approach. but it's whether that the elements put forward performance, whether that's going to be sufficient in the MPO context, or if there's anything else again that we should be looking to use.
Anthony or Jamie, any comments from your perspective in terms of use? Go ahead.
Yeah, just coming in, the language looked all good and appropriate. But when I looked at this table, sorry, I'm just opening it up on my screen. The performance indicators and the achievement of performance objectives, they are definitely the two areas that lots of entities struggle with. And the first area that they significantly struggle with, some entities, is the selection. How do you go about selecting what are your key performance measures? And we've been doing a lot of thought around providing appropriate guidance around that. Not easy, but that is the challenge. We're not talking about debits and credits. It's a lot harder to choose what you report here. So that's been a challenge. And then it's about what the measurements are and how you assess them. And we've got a history in New Zealand of people reporting about impacts and outcomes, and people reporting just on what services they're providing. So we have spent some time with entities struggling with that. So probably just highlighting those are areas where additional guidance will be needed, because MPOs, just by nature, they want to do the right thing. And yeah, when applying these, they get stressed because it's not numbers that come out of a bank statement. This is hard stuff.
Thanks, Anthony. And I guess so this is a sort of area where, in terms of the sort of hierarchy, actually we're proposing going, reasonably close to jurisdiction specific guidance. Is that right, Phil?
So for what I've tried to do in the drafting is make it as sort of principles based and high level as possible to allow individual entities to choose what's most appropriate for them. I think the feedback we've had is that we will need to provide a decent level of implementation guidance and examples around this, although being wary that we don't then guide people down one specific sort of jurisdictional approach because of what we're familiar with when we're drafting. But I think this is an area, it's an area where I think we could see a lot of benefit, because for me, an entity should understand what it's trying to achieve and how it measures that. And if an entity is struggling to do that, this could be something that actually provides a lot of benefit to them. In the draft I've got at the moment, I'm flagging that where an MPO already provides performance information to goods and service users, resource providers, donors, and others outside its general purpose financial report, this is the kind of information it might want to utilize here. But I think, there will be, it is going to be a struggle to provide an appropriate level of implementation guidance that doesn't then guide individual MPOs down a very specific route. Because if this just becomes boilerplate, we had to tick these 4 boxes, it would be pointless having it.
And Anthony, just going back to what you were saying, are you looking to provide additional guidance on this in the near future, or what's the situation with the NZASB?
Yeah, so we're working on that now, and our new standard, I don't call it a new standard because it's been around for about 5 years, but entities are only applying it in New Zealand for the first time now, so over the next 2 years. So yeah, we will be looking to provide additional guidance, and we've added some additional guidance to our smaller entities, which we call Tier 3 and Tier 4. So yeah, the answer is we have been doing some work on it, and we'll be doing some more, which we can, I think we've shared some, but I can check we've shared everything.
Okay. So I think, Phil, as we move forward on this, I think, we probably need to feel our way in terms of, firstly, what's the nature of the drafting, and secondly, depending on how this is presented, the timing and nature of any additional guidance. It may be that, you know, if there's good guidance from New Zealand that's come out that would support implementation, that might be perhaps a way forward in terms of actually, rather than, you know, either we reproduce or actually maybe, you know, to begin with, we actually direct people towards that. I don't know. We probably need a bit of thought on that.
Yeah, I think in terms of getting feedback on the ED, we are going to have to provide example reports just so people can understand how this would look in the real world being applied. So if there is, if there are examples, and if this does actually, at least in the performance section, if this does tend to mirror the New Zealand approach, if there are examples of entities, or you do have examples of how to apply it, that'll be really useful.
Yeah, and I think from experience, it's been more about educating the preparers and the accounting firms and around making sure they know that there's options here and you can do it in different ways. I got highly annoyed last year when I won't name the accounting firm, but they talked about it as impact reporting, and it's not impact reporting. You can choose to report on your impacts, but you don't have to. So when they were running around New Zealand saying you have to report on your impacts, I was pretty annoyed, man.
I know, just a general question, are there other jurisdictions that have got anything comparable at the moment? I mean, you know, I think, again, that might influence how we actually handle this one, you know, because I think if we've got a number of jurisdictions that have guidance on an issue, then, you know, that sort of directs you in a different direction. But actually, if it's just New Zealand that on this particular area actually has guidance, then I think that might argue for a different, you know, a different approach, certainly to begin with, when we're consulting on the principle, at least. Sam, you want to come back in on this?
Well, it's something that's come up in the DRG and the PAG and various conversations about organisations that are doing activities, especially human rights, kind of advocacy type organisations, or where disclosing what they're doing could actually be detrimental to their existence as an organisation. And I wonder if we should put a question about that in the ED as a question or something. You know, would exemptions, what would we expect for them? And we do need to find a solution because it keeps coming up again and again, where being transparent could be detrimental.
Phil, back on that.
Yeah, no, I fully agree, because it has been raised several times, and it is a very valid point. So, I mean, from my experience in central government, where we had, say, the security services, which had to comply with the basic accounting standards and had to comply with basic disclosures around governance, but they would not then go into detail as to what they were spending their money on, and where and how. So I'm sure there will be wording that we can do. But yeah, I fully agree, because it has been raised several times. If a human rights organization is working in a particular area, it doesn't want to disclose what it's doing that would put its operations and those who it's helping at risk. So it's very cognizant of that.
Thanks, Phil. Okay, and I think there's also the kind of example of you know, where you have a contingency around a legal case or something like that, and obviously you don't want to prejudice the outcome by you know, so I think if you can look to those examples, that would be helpful. Yeah, Jeff, and then Anthony.
So here in the US, we don't have anything on the private sector side, but we do have something on the governmental side. And Ian, I don't know in other organizations, other countries, if it's similar. The GASB has guidance on service efforts and reporting of service efforts, and that could be perhaps useful.
Okay, thanks. We can follow that up with GASB. Or if you can direct us to the right place, perhaps, Jeff, and then you know.
Yeah, I'll do that. I'll direct you. I'll direct to the right people.
Yeah. Okay. Thanks, Jeff. Anthony.
Just a thank you. Just a quick positive note that this is difficult and challenging, especially first time through. But nobody I've heard in New Zealand has disagreed with the benefits In fact, we've heard it the other way, that this is benefiting many NPOs. It's helping them tell their story. It's helping them with the grant applications and increasing donors. So it is a very positive outcome, but we appreciate that it is a difficult area also. So yeah,
and we ought to make sure we put that positive case in the,
that's all.
in the conclusions on that. Jeff, are you still in or okay? So Phil, what else would you like to focus the group on?
So I'm conscious of time because I think my allotment on the agenda is about to run out, but it was, are there any other specific reporting requirements that the TAG thinks would be beneficial to include now? So sustainability reporting was mentioned by a number of the respondents to the consultation paper. I mean, we've taken the position that we think it might be a little too early to require mandatory reporting on that while things are in flux and while entities aren't used to doing the sort of basic performance reporting anyway. But it's whether the TAG disagree with that, whether there's another specific reporting requirement they think should be included.
Thanks, Phil. I noted going through that actually, you know, if you think about the task force on financial disclosures for climate, TCFD, that the approach there is governance, strategies, risks and metrics, and actually we cover each of those in the mandatory. So if you like, by implication, the sort of basis that's being built on or is proposed to be built on by the International Sustainability Standards Board it is kind of there, and you can build off that. But as you say, it's a very active debate at the moment, and it certainly feels way too early to ask, you know, for that. But what we're doing wouldn't preclude you from doing that. I think it's also worth noting that we know that the Global Reporting Initiative is going through a process of applying its general guidance in a sector context, and on their eventual to get to is guidance for the NPO sector. So I think we'll need to engage with them, and in, you know, that's something where CIPFA has had initial discussions with them, and we've suggested that there will be a need to engage with you know, Humentum and CIPFA when they get to that. It's fairly a long way to track at the moment, but
I think it's the last sector that they've proposed to look at. It's like sector 40. So if we can engage now and potentially mold that as well, that'd be useful.
Right. Okay. Everyone okay with that? That you know, we don't require anything in that space, but there's a kind of watching brief. Okay. Any other points anybody wants to make on the way forward then in terms of narrative reporting? Okay. That's good. So then we move on to the last item, which is the reporting entity paper. And we welcome Sarah into the meeting. I think I got a note to say you were feeling a bit iffy, so we'll you know, if you want to keep the camera on, that's fine. If not, that's fine. You know, but welcome, and over to you.
Thanks, Ian. I tend to have to put the camera on anyway, so I'm going to leave it on. So apologies if I seem a bit stilted. That would be my only caveat. Thank you, everyone. In terms of the reporting entity, we're continuing on from the last meeting where we discussed the consultation paper, but this is the next stage. We're looking at what drafting is taking place and takes on board the decisions made at the last TAG, i.e. around control, but it hasn't going into detail on the control bit, but there are some elements of that. So attached to the paper is a separate annex on all the drafting, which we need to refer across to. So the first element is the reporting entity, and or the reporting NPO as the drafting takes forward. And what that looks at is the description of the reporting NPO, the parent, the subsidiaries, consolidated and unconsolidated financial statements, which generally follows the IASB conceptual framework and is inspired by with mild interpretation. And so the definition, it follows the IASB framework with NPO interpretation. We've also put in there the description of control, but no more detail than that at the moment at this high level. And that description of control is based on the description in IPSAS 35, which is the IFRS 10 description. Do you want me to stop each question, Ian, or do you want me to go through?
If we can just, so I think if we step through the questions, if that's okay.
Yeah. So that gets us to the basic IFRS conceptual framework definition of reporting NPO and the definition of control, and gets us to the first question, which is, does TAG agree with the inclusion of the definition of control at this point, which is IFRS 10, but I've written it in IPSAS terms.
Okay. Any comments on that proposal? Ready?
Thanks, Ian. I was first wondering here why we talk about it in this section, but I think that's if we talk about control, then I think then we do have, I think, illustrative examples. But I was also expecting some guidance on the aspects of the control under 10 or IPSAS B 35, was it? Exposure to the returns, variable returns, power, etc. Because I think we do have fair bit of that application guidance in our IFRS 10, the NFP annex, and illustrative examples. And I haven't seen the guidance. I think it's just the illustrative examples, and I felt that there is a bit of gap between control and then illustrative examples. And it might be then in consolidation section of the impact, but if we are talking about control here, I think it should be here, especially if you have illustrative examples here.
Yeah. Shall I respond to that?
Yeah.
It is literally because of the way in which we've started drafting it. The example is there for completeness because those are all the examples that I thought necessary. But yes, when we get the full decisions on whether we're going to the IFRS 10 and it's in section 9, that's when that will sit together and there'll be more exemplification. So I could have taken that last question out, last example out, but I didn't, just for completeness at the moment. So yes, that is sort of the tag end of when we've gone through all the analysis of what we think about IFRS 10, that's when that example will more come into light. So apologies for that.
Okay, thanks for that, Freddie. Okay. So then take us into question 2. Anything you want to point out there?
This is where we start doing an element of where there may be difficult decisions, which is what really the consultation paper focused on because of the difficult operational structures that we have. And what we've got here is it starts how to do it is based on the characteristics type approach, which is emanated or had early inspiration from IPSASB commentary in the IPSASB conceptual framework. And the second point, which is the second part of the twofold approach, is to use the information needs of a reporting NPO. So it's a twofold process, and there might be some arguments of not having a twofold process, but a single process, which are valid points. It's just whether, because I'm hoping that the two are complementary and therefore provide more guidance, but there are arguments for just doing one or the other as well, and probably a characteristics-based approach if we were going to do that. So it's additional guidance on decisions around reporting NPO where it's not simply a legal entity or a parent subsidiary approach.
Thanks, Sarah. So any comments on the proposed two-step approach? Jeff G.
Yeah, I just had a question. So just to understand it better, is it that you go through in paragraph G 2.31, you go through the key characteristics first, and if you pass those, then you move on, or are they all of equal consideration? I wasn't sure how it worked, if there was a hierarchy or not.
Thanks, Jeff. Sarah.
I didn't put a hierarchy. There could be a hierarchy where I would suggest property SASB one is the starting point, but at the moment I've rated them as being equal.
Thanks, Sarah. I'll take comments from Catherine at this stage.
So I'm struggling a little bit, probably, I guess, with the first step of this. It seems to me that the paragraph that Jeff just referenced, G2.31, is really just reiterating some of the points from the indicators we provided to identify an NPO. And I'm not entirely clear that when someone would read those, that would help them with the question at hand here in terms of sort of defining those boundaries of what the reporting NPO is. I didn't get that to be helpful information or helpful guidance in sort of setting that boundary. I thought the sort of understanding the user needs made more sense, but sort of when I read those 2 points in G2.31, I don't know as a sort of preparer whether I would feel like that gives me clarity on what my boundary should be.
Thanks, Catherine. Sarah, back to you.
I had similar thoughts when I was doing it, Catherine, I must admit. But I thought because it sort of was the starting point to thinking about what the NPO, so that I thought they were allied concepts, but I take your point, because I did think about that when I was looking at what Phil was doing in his part. So I can move to look at that in more detail if you like.
Yeah, and it might just be sort of seeing how it all sits together. Obviously, we're looking at just a part here, and we've discussed sort of the section separately on determining what an NPO would be for the sake of this guidance. So it might just be sort of maybe cross-referencing a little bit more to say, if you've identified that you're, within the realm of this guidance, here are some other indicators on how you figure out what your reporting entity is.
Yeah, great, thank you.
Yeah, thanks, Catherine. I think that sounds like a very sensible way forward. And I think to the earlier point, then we do need to be clear about the sort of step that you kind of, in a sense, step one is the gate to step two.
Mm-hmm.
Okay, Freddie.
Sorry, I had minor question in paragraph AG1. What caught my attention is that the second sentence, general purpose financial statement may be produced as a result of, and then we mention impact. And I just wanted to clarify, well, impact is not the document or framework that will require preparation of the general purpose financial statements, right? It's when entity is required to prepare GPFS and is NPO entity, they will use or shall use impact. Just wanted to clarify that. That's the case and not the other way around.
Thanks, Freddie. Sarah?
I think generally that regulatory requirements will specify it, but I think, for example, if you need, I think I was thinking of if you're producing group accounts in accordance with standards, that's where impact will come in. I can look to clarify that a bit more. That's where I intended that element to happen.
Yeah, I think it sounds like clarification is what we need. And I think this kind of references the point that Catherine made, which is actually at the moment it's trying to work out how the whole thing fits together and get the, the kind of cross-referencing and where we set up a principle, right? And then where we elaborate on it.
Yeah.
Okay. So then let's move on, as we've got on to application bonds. Let's move on to the question that you've posed there. Anything you want to say before I open up for discussion, Sarah?
No, simply it's not really simple, but it's trying to exemplify when you have issues around reporting entities. So to help with the bits we've discussed earlier, and then to look at the issue of branches, which was a part of the quite key part of the consultation paper, is how would you identify a branch and an internal branch? So it gives key factors in doing that. And it sets out the accounting requirements for internal branches. Again, these are key elements of the consultation paper, so it was answering those questions. It's emanating from the bits in section 2. Okay,
thanks, Sarah. So we're on to question 3. Any comments that TAG members want to make? I mean, obviously, detailed drafting, you know, you can pass those comments through outside the meeting.
I had one question on those branches and not too familiar with that. Was the comment in AG 15 that all funds raised by internal branches are recognized as an income? And I was wondering, isn't a matter of revenue recognition criteria? But I might be just missing something glaringly obvious in branch accounting.
Yeah. No, it's apologies, that's imprecise drafting. I will make that clear.
No.
Okay, thanks for the spot, Freddie. Catherine.
I like the part on branches. I think that in the application guidance, the sort of first part, I don't know if we really added much beyond what was already in the proposed sort of standard text. So I would just sort of question whether we need application guidance or is it sitting in the right part? Do we just build it into the, just because when I read through that section, it didn't provide a whole lot more insight. It was a little bit redundant to what's already in the proposed text of the standard itself. So I would just kind of look at that and see whether maybe we just combine it all into the proposed text, or is there sort of more elaboration needed on sort of the general approach. But I thought the branches bit was good. Just on the branches, we sort of continue to use that term branches and assume that the users of this guidance know what that means, but I didn't know whether we needed to get into a little bit of what a definition or what the intention is. I think when we're talking about international standards, we need to make sure that sort of there's common acceptance of what that means, and that may not be a term that sort of incorporates everything that we intend it to. So I don't know whether we go so far as to define it or sort of provide, again, sort of indicators around what we're sort of referring to when we talk about branches.
Thanks, Catherine. Yeah, I think you're entirely right on that. So we might want to, and perhaps we leave that with the Secretariat to have a look at. I wouldn't probably go as far as a definition that you could either have a description or indicators as alternative approaches. So perhaps if we leave the Secretariat to have a further think about that. On the, I think there is, and we will get a feel for it as we move into it, but I think there's perhaps a kind of question back to the Secretariat about that approach to what is in core text, what is in the core text and what is in the application guidance. And I think, you know, Karen, that might be something that's worthy of an internal discussion within the team, just to make sure that, you know, we're clear on how that approach is being taken. And we might just look back on that with the TAG at a future meeting, and maybe the next meeting, just to get that clarification, if that's okay.
You know, that's fine. And I think it's fair to say it is an ongoing discussion. I think we touch on it every time we meet, and I think the position is evolving. I'm very happy to bring that back to a future TAG.
Okay, so mindful of time then, because I've got a hard stop coming up. Sarah, the next section is on the implementation guidance. So are there any points people want to raise under question 4? In terms of approach taken to that? Okay, that's good. Any other points anybody wants to raise on the draft section then, question 5? Good. Okay. Well, thanks very much for that, Sarah. I think that's you know, that's been very helpful. Thanks everyone for the comments and input during today. I think we've covered a lot of ground efficiently, and it's given the Secretariat good direction in terms of the work for the next few months. Karen, anything you want to raise overall at this stage?
I think we've come a long way, but we've still got a lot more to do. So I just want to add that point of caution, and we will have a very busy meeting at the end of June, and we'll try and get the papers out to you as quickly as possible. Given how this is coming together and the feedback that we're getting, I will probably look to do what we did with the consultation paper and issue a draft of ED1 over the Northern Hemisphere summer for you to look at. So you may get a gift to look at around the end of July. I'm just mapping that out at the moment, but just to foreshadow that as a likely possibility. And just very quickly, also to say thank you very much for everyone who responded in terms of availability for a physical tag meeting at the end of September. I think we'll be looking at having a hybrid event at the end of September, and I'm going to put some further thought into how we might manage that based on responses that we've got, and I'll come back to you in due course.
Okay, thanks very much for that, Karen. So I think with that, we are bang on time in terms of finishing. Thanks very much, everyone. Anthony and Jamie, you know, you're free to go to bed now. So thanks, everyone. Please do pass your drafting comments through to the staff on the reporting entity, and see you at the next tag meeting. And thanks very much for the additional meeting today. It really helps us go through a lot of issues. So thank you.
As always, thank you very much, everyone, for your input. Really appreciated. Thank you.
See you, everyone.
Thank you.
Bye for now.
Bye.